Good morning, everyone. Welcome to another Trading View update. We've seen Bitcoin recover a little bit from the continued grind lower. That has been the main story since the beginning of the month. We can see pretty clearly how we're just trying to break back up into that area where we were for the majority of the month, which previously acted as support on several occasions. If we move higher, expect some sideways trading to continue over the course of the coming days. But this level at 39,300 really is going to be key. In the midterm or over May, I think May is going to be an absolutely cracking month. We've still got this final leg of this overall triangle to complete. Yeah, so we're still waiting to see this play out, whether this E is going to be down here or going to come through here. But at some point, this support level will be tested one more time. As the month now draws to a close, what we really need to be careful of and keep a very close eye on is the 20-month EMA. So let me just get that up. Oh, actually, I'll get it on the other. I'll get it on the longer chart just to show you this level. The 20-month EMA historically has been a fantastic indicator of whether we've got room in the bull run to keep going or not. Historically, when this level has been broken, we are more than likely to see some sort of capitulation event occur. Let me get this up. So we've got moving average exponential. We've got this. So we can see from the previous runs how in a bull run, this line has always held. Even in the bear market of 2013, it held at first. Once we actually had a monthly close below that level, shortly afterwards, we then actually capitulated pretty aggressively. Same again with the previous bull run up. Bear market 2018, we actually held that level for a couple of months. As soon as we closed above it, we had that big capitulation event. We are still at a point now where we are holding this line, but only just. If we want to see this bull run to continue throughout the course of the next few months, we really need to make sure that April closes above this level. So we're looking at 38,730 as our real key level of resistance. Now, if we go back to the shorter term chart and see where that might come in, you can actually see, yeah. So it's around 38,700. And what we are actually now going to see over the course of the month, over the course of May, is a high likelihood that we're still going to grind lower. So it's a question of how long for May, how long will we actually trade below this level? And are we then going to test the support and come back up and close above this level once again at the end of May? Yeah. So if this line is coming through something like this, we need to now, if for month, we ideally need to see the support level tested with a strong rebound to close the beginning of June, end of May time back above this level. If that happens, that would be a very strong sign that there's more life in the bull run yet and that we continue. If we close either April or May below this line, then indeed we could well be looking at some sort of capitulation event over the next 2 to 3 months. Which has just historically been the case when this line is broken. If we move on to Ethereum, similar sort of story in Ethereum. We've got this doggedly lower trending price. We're still waiting to complete the final leg of the triangle as well, which is also set up on Ethereum. This orange line again is that 20 EMA that we're talking about. Similar sort of story. Ethereum still is more than likely to close the EMA above this level. Again, it would depends to see what Bitcoin does. Bitcoin is the one really that we should be looking at this point. But just keep an eye on this. On the RSI, we're in this upward trending parallel channel as well. We're finding support at the bottom of this at this moment in time. As long as we don't move back down into the RSI at 30 oversold region, and we just tick sideways here, even if we see prices grind lower and the momentum actually stays within this channel, that overall is a good sign. We can see actually that this bounce also came from the low back at the 22nd of February. So we're just holding that line now with a relatively neutral market. The last thing to look at this morning would be equities. For the 10-year yield, we're at a very interesting stage where on the log chart, we're now finally encountering some sort of resistance, which has been in place since the 90s. Actually zooming in, we can see how we broke through for a bit, but are struggling to actually maintain that. And are looking to go back below. The weekly RSI also in huge overbought regions. Historically, this has been a very accurate indicator as to when we might see either some sort of correction or at the very least a move lower. So keep an eye on that. And then looking at the US dollar index as well, we're at this point of resistance, which has been tested once in February of 2020, previously November 2016. RSI also in overbought areas. It could move a little bit higher, as we saw in DEC 2014. But again, we're at those sort of levels where historically, at these overbought levels, we do see a change in momentum and prices or the index actually pulling back. Both of these factors, the US 10-year and the DXY, if they start to draw back, we'd expect to see some more risk on sentiment across equity markets, which would spill into crypto as well. That's it from us this morning. Have a good trading day.